If I may, I would like to address my first question to Mr. Spearman. What are some practices that credit unions use to manage risks associated with credit card lending to member businesses?
Mm-hmm. Well, basically what we do is we know all of our businesses personally. We're involved many times in helping them assemble a business plan. We work with them. Generally speaking, we work with a lot of startup businesses, and we actually have them produce a business plan. We provide them resources to do a business plan. So when they come back to us, we have a pretty good idea that we're really a partnership in this process. And if it's a startup business, we'll probably start with a credit card, but we will start at a modest credit limit and work through that process. And generally speaking, the credit card is perhaps the first instrument that's used in the relationship, and soon will be followed by other relationships. So we continue to work with them, and we have really in our portfolio, with credit card portfolio, which is rather small, we have about 61 accounts. We don't have any real delinquency or any issues with those cards. Primarily, they're used for payment device.
Mr. Rosaker, would you mind to comment on some of the practices that your banks use to manage risks associated with credit card lending?
I'd love to. In conjunction with what Mr. Spearman said, we also developed this deep relationship with the customer. And as I testified, you live in their same neighborhood, the kids play Little League together, you know that their goal is to succeed and you want them to succeed. And I think that through the sophisticated computer systems that back the business credit card, you can actually monitor their sales, their expenses, where they're spending money, how they're spending money, and you can do that almost on a day-to-day basis, where in a traditional business loan you really don't do that and can't do that other than on a quarterly or whatever basis. But I think to sum it up, is it's a relationship, it's the fact that you have the tools computer-wise to do it, and finally, I think when you look at what a community bank is and that small entrepreneur is, that's the time when one owner of one business can sit down with the owner of another business and solve the problem and make it a win-win situation.
Can you comment on how would restricting lenders' ability to price risks affect credit availability for small businesses?
I think that the risk and pricing for risk is important. And I know that there are many studies that have said this is tightening or this is loosening and what have you. But I think when you look at it, credit card pricing is significantly different than the traditional loan pricing. There are significantly different risks involved in the credit card from the standpoint it's unsecured credit. It is not a collateralized line of credit as you would in your traditional. So you do analyze it differently and you do look at it, but you have many more tools to use than you do in the traditional business loan.
But will this restricting the ability to price for risk will create additional costs that will be passed on to?
Absolutely, because you're going to have to make up that limitation that you have on the risk in some other form. I mean, you can't do it for nothing.
Yeah. Mr. Gaywood, one of the reasons some individuals advocate for traditional loans is that their terms are perceived as being more fixed, thus providing businesses with greater certainty and enabling them to effectively plan for the future. Do you believe that traditional loan terms really are more fixed than credit cards, or that they better enable businesses to plan for the future?
Well, thank you, ma'am. Actually, I think they're fixed in favor of the banks. As my testimony revealed, the loan applications received from the banks were very restrictive. Certainly there was fixed there, so we knew how much we could get over time, but the risk was huge. And the autonomy the bank had to call in the loan at any time and to require us to go through them for a number of our operations were just too restrictive.
Any of the other witnesses would like to comment on that question?
Also, ma'am, if I might, again, like as I say, the credit card was our preferred means because if we pay on the terms of the credit cards, there's absolutely no finance charge, so our cost is minimal, if anything.
Okay. Dr. Lum, in contrast to traditional loans, most banks are willing to issue a credit card to a business without requiring personal guarantees origination fees or without taking a security interest in the business assets. What makes credit cards more open to these less restrictive lending terms compared to traditional loans?
I have found the irony in the fact that banks will not often provide traditional loans until a business is established with, for example, 3 years of operational history and a track record, but yet it is banks who will turn right around and with a signature will provide a credit card loan for a substantial amount of money with no paperwork whatsoever as compared to exorbitant layers of process, accounting, and so forth, incurring costs for the businesses. And I think this explains why credit cards are so popular. I would say that credit card usage is very high with respect to personal credit cards, and those who sign both business and personal credit card agreements are in fact signing that they are liable for those as persons with Social Security numbers, with credit ratings, and so forth, which are subject to be damaged or, of course, enhanced positively if they perform in accordance with the bank's expectations and reporting.
Thank you. Dr. Walker, in the 5 years since the last Federal Reserve survey of small business finance, credit card use by businesses increased by 14%. During the same period, the use of personal credit cards by consumers increased by less than 1%. Are there factors associated with business use of credit cards that have contributed to this rapid growth?
Well, from my knowledge, business has not found any other alternatives at a price that they could afford. Even right now, the prime interest rate is 5.25%. The typical credit card quotation yesterday was 13.4, more than 2.5 times. And yet, business cannot seem to find alternatives, and particularly small business. That's why I drew that contrast in my testimony, because I think it's a good indicator of what small business faces when they go looking for funds.